Welcome. In this video, has ZBCN coin started to decline? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the striking structures on the chart was the long-standing uptrend line. This trend showed that the price was making higher lows and higher highs at regular intervals, and that the market was generally buying. Such technical formations often give investors confidence and stabilize the market, but every trend has a lifespan. This uptrend also started to show signs of weakening over time, and eventually, the price broke below the trend. This breakout is a very important development in technical analysis because a downward break of a trend line indicates that buyers are no longer as strong as they used to be and sellers are gaining ground. With the price breaking below this rising trend line, there was uncertainty among traders. Some traders thought it was a temporary aberration, but the subsequent retest disproved this view. This is because the price recontacted the trend line it had broken and tested it as resistance. There was no strong upside buying during this retest, but rather the price struggled here and faced a downside reaction. This shows that the trend line that was previously support has now become resistance, and the balance of power in the market has begun to shift. The failure of the retest, i.e. the failure of the price to move above this line again, is a technical confirmation of the decline. This is a signal that should be carefully monitored for short and medium-term traders. The fact that this line, which has been supported many times in the past, can no longer be crossed indicates that buyers have lost their psychological advantage and sellers have become more active. At this point, it is predicted that the downward movement may continue for a while. However, what is important here is how deep this decline will go and where new support zones will form. The main thing that the price needs to do in order to regain strength and start rising is to break back above this broken trend line. This is technically very critical. Because if a broken trend line is crossed again to the upside, this raises the possibility of a fake breakout, indicating that the buyers in the market have regained control. In such a case, the price is expected to launch a strong attack and test previous highs. However, this transition is not easy. The market is usually indecisive at such points. The price may test it several times and may even dip below it again from time to time. Such scenarios require patient and disciplined analysis. Looking at the current structure, the price needs to break this trend line strongly and persist above it in order to start an upward movement again. Just a short-term bullish pin or a bullish rally without volume is not enough to confirm this turnaround. Therefore, the price's approach to this trend line, its reaction upon contact, and especially the trading volume are of great importance. If the bullish attempt is supported by strong buying volume and the price settles above this line, then we can talk about a scenario where an uptrend may start again. Also, after such trend breakouts, the price may sometimes enter a post-decline horizontal consolidation period. During this process, the price may get stuck in a certain range, which could be a harbinger of the next big move. If, after this consolidation period, the price moves back up and breaks above the broken trend line, this would be a very positive development. In this scenario, buying positions may be back on the agenda. If the price breaks above this trend line on strong volume in the coming days and reestablishes this area as support, the previous bearish move could be considered a thing of the past. In this case, buying opportunities may arise again for investors. In particular, a bullish move that extends to previous highs could offer investors great earning opportunities. However, the trend line must first be crossed and maintained. Otherwise, each bullish attempt could set the stage for a new wave of selling. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. One of the notable structures on the chart is a strong support zone below the price. This area has played an important role in previous price movements and was an area where buyers reacted strongly. In technical analysis, support levels are areas that have the potential to halt or even reverse the price's decline. These areas are closely watched by traders, especially if they have been tested several times before and each time there has been an upward reaction. Currently, the price is approaching this support level, and given the previous reactions, there is a strong possibility that an upward reaction will occur again once it touches this point. Support zones often also work as psychological boundaries. When traders reach these areas, they tend to buy with the idea that enough is enough. Therefore, buy orders are concentrated in such areas, volume increases, and the price is more likely to change direction. In addition, the fact that these levels have worked many times before increases investors' confidence in that area. In technical analysis, such areas are also referred to as demand zones or liquidity pools. This is because many traders prefer to open or add positions in these areas. This increases buying pressure when the area is reached and the price is more likely to react upwards. Especially at such support levels, if the price has left long wicks or V-shaped reversals in the past, this shows us how strong the area is and how quickly buyers step in here. In terms of technical analysis, this is also an important clue, because if buyers react strongly at a level every time, it means that the market attaches importance to that level. This tells us that confidence in that level has not yet been shaken, and there is a strong possibility that the price will show a similar reaction when it comes to that area again. Of course, support levels have no absolute certainty. The market is always full of surprises, and support zones can erode over time. Especially if the price comes and goes to this level too often, buyers here may gradually run out and eventually break the zone. That's why when deciding whether a support area will work or not, it's important to look not only at the past, but also at current market conditions, trading volume, and momentum indicators. Nevertheless, the price approaching a level that has worked many times in the past should be carefully monitored from a technical analysis point of view. This is where traders' strategies come into play. Some traders prefer to buy gradually as they approach the support zone, while others look for a clear reversal pattern or confirmation from the support zone. It is especially important to be patient and not to open hasty trades at such support contacts. Instead of judging by a single candle, when the price hits the support level, it is better to conduct a multifaceted analysis by looking at the overall structure, past reactions of the price, trading volume, and indicator signals. If the price hits the support zone and shows an upward reaction from there, it could mean a retest of previous highs. This could be an important opportunity for investors. In particular, retargeting the broken resistances could accelerate the price. If the price makes higher lows in this process, it is an important indicator that the uptrend has resumed. In summary, this support level, which is currently just below the price, is an important technical area that has been tested many times in the past and has seen strong reactions. If the price approaches this level again, we are likely to see an upside bounce. However, this alone is no guarantee. Therefore, traders should keep a close eye on price action in such areas, be wary of false breakouts, and closely monitor trading volume and patterns. When the RSI indicator was analyzed, there was a distinct uptrend structure that developed in line with the price action. This ascending structure caused the RSI value to move in an upward channel for an extended period of time. Usually, such ascending trend lines are important technical signals indicating that the market is dominated by buyers and momentum is moving in a positive direction. However, over time, the RSI has touched this trend line several times and has finally made a sag below it. This can be interpreted as a technical breakout and is considered a sign of weakness by some traders. But there is an important detail to note here. Not every breakout means that a real downtrend has started. Especially in momentum indicators such as RSI, such sags can sometimes result in a fake breakout. This means that even though the RSI may appear to have dipped below the uptrend line, it is necessary to wait for a few candle closes and observe the behavior of the price to see if the move is permanent. As a matter of fact, if the RSI rebounds back above the trend line in a short period of time, it indicates that a positive sentiment may prevail again in the market perception, and the price may follow this sentiment and start an upward movement. Another noteworthy factor at this point is the value range of the RSI. If the RSI is hovering just below the 50 level and starting an upward reversal, this could be a strong indication that buying pressure is starting to increase again. RSI should rise back above the trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.